Hello guys, welcome to the Trading Parrot. Hedge funds are shorting Ethereum like never seen before. In today's video, we're gonna look for clues on whether what they're doing is a great idea or actually if they're going to get smashed in the face. I'm also tempted to give you an update as well on XRP and Solana. Many people have been asking me for what's up with the pair Solana over Ethereum, and I think there are some interesting things going on at the moment, totally worth it for an update today. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Yesterday I put a video about Ethereum with my target for 2025. I gave you a target that we should be aiming, but things have changed slightly due to the recent capitulation to 2.1k on Ethereum, and that has shifted down the initial level of resistance. I am not necessarily saying that we have to stop at that level, which if I remember right was 3.3k, but at that point we have to pay attention. Don't worry if you missed the video, you can watch it later. The levels, I already have them in my chart, so we can take it from here, but whatever you do, don't miss that video because it also covers my views on the Bitcoin dominance in altcoin season. Let's get into the content. So the big news since yesterday is all about the short positions surging 500% coming from hedge funds. They seem to be increasing their short positions. This is the actual chart that everybody is circulating from influencers. And one of the main reasons to attribute to this struggle is the dilution due to the extreme numbers of tokens that are part of the market now, surging to over 1 million tokens. This cycle feels like Bitcoin is the king, at least among institutions, and everything else so far is being ignored by them. Retail completely bankrupt, comes as a tourist and goes as soon as there is a little bit of upside. But before we start acting like the rest of retail and getting emotional, dropping some tears and starting to close position at a loss like I show you they were doing at record levels this morning, together with past Saturday on the 25th, causing that we get tons of signals in here to buy Ethereum in the past of the cycle since the bottom of the bear market. Each and every single signal went up, and not always just barely 30%, but sometimes even 170%. But with all this struggle, and as usual, every time you get a signal, you feel like, no, it's gonna continue going lower. And in these times, in here, it makes it even more of a struggle to decide to come in after seeing this is the fourth signal in a row. These two in here had barely an upside of 10%, but the third signal hasn't had any upside, neither the fourth. If we look at liquidation levels on a longer term chart on Ethereum, we can clearly see, if we zoom out, that most of the fun is beyond $4,000, starting with the red that ends at 4.2, and we can say that the peak ends at 4.336. And the motivation for the downside seems very small at this point in time. If we zoom in below the price, there is some red in here at 2k for $30 in this area, and we left it on the table on the 2nd of February when we hit this level there. Going beyond, we don't see much more red, which makes me believe that this intention to short Ethereum is just speculative unless someone knows something about general markets potentially having a crash in the shorter term, in which case Ethereum will find an actual motivation to continue going lower. Because yes, it's underperforming Ethereum, which means that if Bitcoin now pump to 130k, probably Ethereum is gonna go somewhere around 3.3 to 3.5 unless there is a shift in the sentiment across investors when it comes to Ethereum. If we look at the weekly chart on Ethereum, we can see that we are still respecting more or less this line of support that spans all the way, we could say, November of 2022, and is still valid. If I remember right, I had this bull flag like this initially, but since we produced this breakdown, I started accommodating the flag, expecting that it was going to continue in this trajectory, something like this, trying to connect this point with that point and with the lowest close on the 27th of January. But then we have, in the beginning of the week, a move to 2.1k, and that completely spoiled the flag. And the only thing that we can really do at this point to try to keep the hopium alive is to place it something like this touching that point and touching the lowest closing here with the confluence of the support line. But there is no much room for expansion of the flag. We cannot literally continue just like this to the infinite, particularly because the flag starts from this level. So you cannot have a flag that goes beyond 2.1k and still call it a bull flag. That's literally a capitulation. So enough of jokes, and I'm gonna focus that this is the weekly support on the price action, and that there is some way of still keeping alive a flag that is now extremely disproportionate relative to the lowest level. So if we have to do a breakout, pretty much we have to do it from here. We get to the 4.5, and if I place it from the lows, I get to 4.1, hitting the liquidation level. Let's go to the RSI. The RSI is going to give us some other ideas. The idea I already mentioned yesterday is to face back the resistance coming from the red line. That is at an RSI of 53. So just by rallying against resistance on that RSI 53, we can get Ethereum to 3.3k, give or take. That is a moving target, and if the price starts moving towards it very slowly, the target might come down as well. But that is not yet confirmed. If you wanted to be very disciplined and maybe miss a potential bottom, you will have to literally wait until the weekly crosses this line to get some confirmation. And here's the thing. I think that around where we are, given that we are at a weekly support, there might be a decent opportunity. And I think in this case, the opportunity could be coming from this channel that starts from May 2022, that represents how we are flipping between longs and shorts, extremes. In these areas in here, everybody was short. We touched the percentile lowest level, and suddenly, magically, all longs come back in and they move the whole thing to the top of the range. And this hasn't been necessarily perfect. Sometimes we just reach the second band, or sometimes we don't get exactly to the line. But the point is to try to understand what sort of bias we want to have in each of the extremes. And we are at the moment in an extreme where we are both at support on the price, not on the RSI. RSI hasn't said anything. And in terms of longs versus shorts, we are at an area at this time in the cycle where the longs should wake up and take control in here. And given that the short positions have increased so much, if we were able to pivot from here, we could have the perfect recipe for a short squeeze. The thing I'm not very sure is if any of those hedge funds that are taking short positions with high levels of open interest are being reported in tools like Coinalyze, because I believe these ones are tracking leverage positions from futures belonging to exchanges, and I really ignore, I have to be fully honest, if hedge funds are being considered. All I know is that with this recent capitulation, we flushed the open interest by 35% in a single day. That is very similar to what we did on 11th of May in 2024, where we flashed 43%. Notice that those areas where the open interest gets completely reset tend to as well mark areas where we completely flip in the sentiment and we get big pumps. For example, in here, right after that flash of open interest, the price surged 37%. I also want you to note what is the structure of the open interest during a bull market for Ethereum. This can also be used as an alpha to understand these waves in the price that sometimes look so erratic and so nonsense. But you can see that in the open interest, these are the waves that each one have a breakout with a different slope, and the slope is kind of shifting towards the right. Initially, you get a big slope, then you turn a little bit this way and a little bit this way clockwise. Eventually, on your last breakout, you find yourself in a cliff about to enter the bear market. And just by respecting that pattern, if you were to look at this bull market without looking at the price, you could say, okay, we have one breakout, 2, 3, and 4. I'm not trying to count the number of breakouts on the bull market necessarily, because timing wise this one is already in the bear market and we don't have the history of the open interest. So the actual bull market kicks off in the halving event on Bitcoin and there is no data of open interest. So don't freak out that these are 4 and therefore we have 4 in here, we are ready for bear market. That's not what I'm trying to tell you or to take away. But what I'm trying to say is that these flashes have a very, very specific structure on Ethereum particularly. You get a peak of open interest and then there is a big flash that hits that line that is ascending. That is our baseline for the open interest to constantly reset on Ethereum, but always with a slope to the upside. And this bull market does precisely the same. We get each and every breakout with an increasing slope and then coming back to what we could call the home of the open interest. That home resets thanks to both longs and shorts being forced out of their positions. Notice that not always we touch home, but we get close. And if we start facing that resistance, eventually we break out. So we should be expecting at some point the open interest to exit from here. Probably at that time, Ethereum will have already recovered a lot. So that's why I think that this area in here is an area of value, not an area necessarily of the most painful capitulation to come. That again, based on general markets not crashing in normal, typical conditions at this time in the cycle. So we have both the open interest entering into an area of value in the lower area, in this area in here, together with the longs versus shorts also resetting, turning a lot more balance towards the short that we were up until a few days ago. All of that, I consider it bullish. The precise time of the reversal, I ignore it, but we are in a value area. Alright, if you're still in the video here and you are enjoying this, make sure that you hit the like and write down a comment down below. That really helps these videos. You've been doing that, and thanks to that, yesterday video of Ethereum got 5,000 views. Guys, if you didn't do that, the video will get barely 1,000 views, because my videos on Altcoins, Ethereum, the algorithm is convinced that it shouldn't be shown to anyone else, and you can really help me with that. So thanks for all your help. I'm gonna go next with XRP, and we're gonna notice something completely opposite with XRP and with Solana when it comes to the longs versus shorts on the weekly time frame. As opposed to Ethereum, which is in a value area respecting this channel since 2022, on XRP we have hit the top and we are holding in here, and to have additional upside, XRP needs really the help of additional longs entering at this area. So far, with each and every move up, you can see that there are diminishing number of longs, meaning that many must be flipping into shorts at this point, and longs are starting to lose momentum. On Solana, it just hit the top of 66. Let's look at the price action of XRP. XRP has a massive bearish divergence between the top at 2.5 and the top at $3 against the RSI weekly. We have already touched the support at RSI 53, but we did it intra-candle when this week pinched the $1.9. I am tracking that RSI 53 with this line, and it's a line that is coming up, and that is the line that we must respect. So if this line goes this way, whatever we do, we should not break it, turn it into resistance. Right now is getting very close to the line of support of my $2 psychological level as well. To me, XRP has good value the closer we get to support, as long as it's still support. And the upside potential depends on where we close this line. But in my opinion, XRP 99% chances, I can give you this written, won't be able to take the top of the RSI for at least 6 months. And that is because it topped at 92 and it couldn't even do that in the previous cycle. And I will expect a diminishing high coming in at some point. And that could be part of this setup, potentially a rally that gets somewhere in here, maybe up until 80. But I don't expect at all XRP to put a new high over 92, let's say 96. Impossible. I mean, nothing is impossible. And I'm not saying this because I'm fed up that I had to hold this coin for so long before being able to sell it at big profit at 2.8, but it's just past performance and TA analysis, non-biased as much as I can. Let's have a look at the liquidation levels on XRP and let's see where the fun is. Very recently, with the move from 3.3, which was my first target, my second target has been always $4.4, which we haven't managed to get there. The 3.3 play out perfectly. We did a double top, and since then we went to $1.77, and that clearly was a move towards the liquidity. XRP took the chance with this move of 48% down retracement after hitting our target to take the liquidity. And now if we want to see red, we need to trick the chart and remove that red out of the view so we can get a normalized color process that shows us some red. And I can see that 3.4 at the moment is where is most of the risk of the shorts on XRP. So if we were to do that move back to the top, it is high likely that those are gonna get hit. Before that, you're gonna see liquidity at the 2.8 and below the price at 2.2, and the most significant is this one that is at 175. That is precisely what the price couldn't manage to take, and the last bit of liquidity below the price that is significant. To be honest, people are holding on to their longs at the moment on the expectations of getting the ETF approved for XRP, any big news of the government or banking using widely XRP for transactions international. That has been the narrative that keeps these people excited. To me, it's a very high risk considering that we are in a very diluted market, that there is still no liquidity, no quantitative easing fully confirmed, and at the smallest path, cross-fee ratio is at the top. So it's like a pressure cooker that somehow, if you find a way to crack a hole when it's boiling, you get everybody long. Perfect recipe to get hit hard. Non-financial advice, there is nothing wrong. If you think that I'm wrong, just write down in the comment. We are all friends, even if we think the opposite. And proof of that is that I will never long this thing, and I still give you my unbiased opinion that there is a chance that we can rally into resistance or that we can even break here. I agree, it can happen that we go once again back into 3-4, hit those liquidations. If you are the kind of trader that likes data-driven profits, you can go for it. If you think that you should be holding XRP until it gets to $20, well, that's your problem. There's nothing I can say. It's just not my trading style. And let's go with Solana, because on Solana, I think there is an opportunity. That opportunity is around the corner. I wouldn't say by the day we are in the opportunity, but I will say in the next 1 to 2 weeks, you could find the precise entry, that golden entry. If you don't care about that level of precision, then just ignore my words. We are at a very valuable area. Let's discuss that. Let's look at the liquidation levels and other data I can find. So for context, Solana became really weak after the 9th of December. After this breakout that was looking really great outside this symmetrical triangle, it came to test support at 180, and that was a little bit overextended for a retest because that managed to break the support of the trend line. That is something that many coins, like for example ADA and Link, have so far managed to dodge the bullet and not go one level down in the ladder, now placing the support at this line instead. And here's the thing, most of the people, when they see the price action like this, remember the basics, right? Where you look at the structure of a price and you say, well, this is my low, my high, my low, my high, and my low, and they are all higher with time. And that gives you the answer. Is the structure bullish? It is bullish on the weekly, but looking at the momentum, you are taking critical levels because you have these higher highs and higher lows up until end of November. After that, you break the structure and go one level down, creating bearish divergences and rallies that now can go only until resistance 99% of the time. For example, we rallied twice here against resistance. We took longs because we are well aware of that, but most people don't see that and think that this will break out the full highs and go to the moon. For example, our support right now is at 52, which is more or less where the price is, $200. It is weekly support at the moment, and I think it's a valuable area because it's got the potential for this to rally all the way to the top. I think it's low likely at the moment to get fully to the top, but we could mimic an expansion like the one we did in here, doing something like this. I think that on this first expansion, we are not gonna take the highs of November 2024 in terms of momentum. Now, looking at price, where can this take us? 66, let's say 67. So let's write down that number there, and that can give us a rally into $313, which I'm gonna write down there. Notice as well that the Fibonacci extension from the bottom of this rally starting in September 2023 to the lows that we have in August of 2024 gives a golden pocket of 428. The extension of 1 is at $307. That is very close to the target I'm giving you some confluence. So if RSI did something like this, ignore the move back down to support that thing. I wouldn't take it for granted, but let's say at least we get into 66, 67, and then we do something like this and we continue rallying. Whatever happens after, I don't care, but it's very likely, in my opinion, to get another move like this given this context. And I'm taking in consideration to create a high relative to this and to not go beyond this high for this first move. So that gives me this range between 62 to 71 maximum. That's why I pick 66, something in the middle. And one of the big problems with Solana, similar to XRP, is the risk that comes with the weekly being at the top of longs. This is an extreme amount of longs touching the top band. We've been higher than that at 78. At the moment we're at 66, but since this tracks only 150 candles back in time, it's giving you this number as the highest percentile that you can get at this point in time. It can be wrong, of course, but statistics is better to know them than not to know them. And that level of risk, particularly in Solana, it's a bit scary when it comes to liquidity, because on the top end, you can see that there are some longs that can get liquidated at 305. That is the highest liquidation, of shorts that can get liquidated there. I'm gonna flag it there, but to the bottom end, we have way more liquidity, pretty much up until $95. I'm not sure we can get to $95. But since we did this week in here to 174 and we left on the table pretty much everything because we put a high relative to this liquidation at 173, we were not able to take 167, neither 150. Both of them, I will call them from now the two low-hanging fruits for Solana, that I much rather that instead of thinking that this breakout is successful and now that we are retesting for our own convenience as longs and safety, I will prefer that this was a fake out and it took that, and then from there we started pumping. But that's just a matter of preference, and since most of the coins are always following Bitcoin, if Bitcoin sees a rally right now, we might not go to those levels, but there is a chance that with the volatility this week, we hit them. Solana against Ethereum, and I'm done for today. You can see that in this cycle on the weekly, Solana over Ethereum has been in a channel to the upside in here. We have been using this line as a line of support, and throughout the move to the upside, we've been defending this support. If I place a line on the top and I connect each and every high, we can understand why whenever we get to this top end of the range, we see a rejection. Initially, those rejections were not that obvious. For example, in here, you get a huge green candle that doesn't have any wick to the upside, but it immediately sells off and it goes back to the base. With this recent move to the upside that was led by the listing of the coin Trump, we went all the way to the other end, but traders have learned their lesson, and as soon as we get at the top of the range, you can see the distribution going on. This is people selling Solana, while at the same time Ethereum gets bought at those times. That's why there is this imbalance and the weekly candle ends up closing with wicks to the upside. If this pattern continues to play out, we should be expecting Solana against Ethereum to come back and test the base once again. That is not just because we are coming from the top of the range and we were rejected twice, but also because the RSI is in a channel to the downside. That means that since December 2023, that we reach an RSI of 90, even though price goes up, the spread, that ratio, the RSI is doing constantly the opposite. It has had internal breakouts, like this one that was great to enter. This was a great entry that we didn't miss. That's the one that we call out for the RSI hitting resistance. That is where I sold my Solana. But at the moment, where are we? Well, the upside is just again to hit resistance. That resistance at the moment is, let's say, it's 77, and in my opinion, it's low likely that we see the spread have a breakout like this. This will mean a 50% valuation of Solana over Ethereum from being at the top of the range already. We haven't come back home and test the value area of 0.06, which in my humble opinion is what comes next. Notice that Solana against dollar can still pump, but in order for this to go home in such scenario, we need Ethereum to pump even stronger. After all, it's a ratio. Guys, if you want to trade Ethereum, Solana, XRP, Bitcoin, or any altcoins, my best preference when it comes to exchanges is to get both an account on Bybit and one account on OKX. That gives me full exposure to any altcoins that I want to trade. On spot with leverage, execution is everything. So to me, the quality and high volume and liquidity is very important. If you open an account using the links in the description down below, you can claim up to 30,000 in rewards on Bybit and 60,000 on OKX. Lower your trading fees to the minimum thanks to those links. If you want to stay away from KYC, I've got two options for you. The first one is Bluffin. Second one is 2bit. Bluffin is offering 100,000 in rewards based on trading volume, and 2bit 30,000. Guys, thanks so much for watching this video. I'll see you in the next one. Take care. Bye bye.